What's up, Zingers? Welcome back to another episode of Futures Fever. I'm your host, Kevin Dubriske, with a fantastic show for us. I'm going to be showing us some key levels, some market analysis. I'm going to be explaining what is Apex Trader funding. Now, for any new futures traders out there, I have some great slides in store for us today covering what are futures, just some basics, and then some rules of Apex as well. So let's cover some slides, and we're also going to be doing a giveaway of a free Apex Trader evaluation account. So hit that like button, fill out that form in the comments, and let's get started. So guys, I'm your host today, Kevin Dubriske, and on today's agenda, we're going to cover what is Apex Trader funding, live market insights and trade setups, and some giveaways and more. Now, normally we do have David Green and Peter Tuchman with us. Unfortunately, they won't be with us today, so make sure you hit that like button, show some support. It's just going to be the two of us, me and you guys, so let's get it going. So what is Apex Trader funding and what are some benefits? Apex Trader funding provides traders with funded accounts, eliminating personal capital risk. So instead of back in the old days where you need at least 25K to have the PDT rule lifted, or for brokers, sometimes you need at least 2 or 3 grand just to trade futures. We only have to put up $20, $30 depending on the sale for Apex or an evaluation account. They are running a major sale right now, guys, so make sure you hit that like button. I'm going to cover that sale soon. It is 90% off. You earn up to 90% of your profits, guys. What's great with Apex is they have a 90-10 split. You keep 100% of the first 25K you make. After that, it is a 90-10 split, very high percentage split with them. You trade with peace of mind. There's zero personal liability. Guys, you could have an Apex account, start at 50K, pass the 50K. You could fund it over 10K in profit. You could blow that 10K in profit. And guess what? Apex, they'll let you start over, no problem. They do not care. It is okay. It's a 3-step process, right? We want to complete the evaluation account. You purchase an eval, 50K account, your target is 3 grand, your trail stop is 2,500. So if you could hit 3K before your trail stop comes up to your profits, then great, you're able to take in and get a funded account. Once you get funded, it starts you back on that baseline of a new 50 or 25K, whatever account size you chose, and then you're able to then move up. And once you start making profit on that account, there are certain levels that you could start taking payouts on. And guys, I cover those price levels and how much you're able to withdraw per account in this show today. So make sure you guys stick around, put together some fantastic slides, put a lot of time and effort so you guys could know exactly how to use Apex. And step 3, of course, is get paid out. Once you're able to get above that certain threshold, you could take payouts every 8 trading days. Win a free Apex Trader evaluation account, guys. Don't forget, fill out that form below. It is in the comments for a chance to win a free Apex account. What's great is you can pick whatever size account you want if you win, from 25K to 300,000 size. So really great stuff there. They are running a major sale, like I mentioned earlier, 90% off if you use discount code FFEVER for Futures Fever. This ends May 28th. This ends in 15 hours, guys. So make sure you take advantage of it before it runs out. It is 40% off resets as well. So if you purchase it with 90% off, let's say you blow the account in a week or 2 and there's no Apex sales, well, if you still have that old account, you could purchase a reset for just $40, which is even a better sale than the normal price of these evaluation accounts. Discount applies to the first month, and then it's 50% off recurring months. So most of the time, sometimes they'll run an 80% off, and then it would be 80% off recurring. For the 90% off, it's 90% off, and then 50% off recurring. So this is a great sale, especially for people that are trying to purchase the eval and get funded within that month. Now, of course, there is no exact time frame. You don't have to pass it in a day. You don't have to pass it in 8 days, in a month. You could take your time with these evaluation accounts. There is no yes or no, right or wrong. Guys, Apex just crossed over 500 million in payouts. How insane is that? Since 2022, they are one of the leaders when it comes to prop firms. Major sale again, guys. Lifetime PA fees are now also on sale too. If you get funded, so if you get the 90% off your evaluation account and then you get funded, let's say you do a 50K account on sale right now, it's 90% off, probably brings it to about $20, $30. Then you get funded, that's another $140. You're spending a total of your own capital, $170, for the opportunity to take payouts. Now on a 50K account, the maximum payout for the first 5 withdrawals is $2,000. So to put $170 of your own account at risk and then being able to take out 2,000 ROI, return on investment, that's phenomenal. That's fantastic. Even the 300K is set to 200, 250 set to 200. We have the 150 set at 170, which is also a phenomenal sale. I've been trying to get signed up. I can pass an evaluation account. Yeah, absolutely. Real quick, guys, I do want to cover what are futures, because futures are very important. This is a prop firm, but they only allow you to trade futures. There are no stocks or options. So futures are standardized contracts for buying and selling an asset at predetermined price on a specific date. We're not buying the asset like we would on stock or options. You're owning that underlying asset. We're not owning anything when it comes to futures. We're speculating on price direction. 23-hour market access. It closes Friday at 5 p.m. Eastern and opens again Sunday at 6 p.m. Eastern. So that's the only time the futures market is truly closed for a full day, from Friday afternoon at 5 till Sunday 6 p.m. Eastern. And there's no pattern day trading rule. You could be less than 25K. Let's say you have your own actual account. You don't have to be under 25K. You could be under 25K and still day trade. Now, how do they move? We'll be real quick on these slides, guys, just because it's some basics and some of you might know it already. But how do they move? Well, the ES moves 1 point is $50. So one ES contract, if you get ES at 59.50 and moves to 59.51 and you're in one ES contract, you're $50 in profit. Now, it doesn't matter if it moves 1 point for you, 1 point against you. It's $50 no matter how many points. So 1.50, 2 points is 100. Flat. It doesn't matter if it takes a while. When it comes to options, we have to factor in something called theta. That's one of the Greeks. That's the time decay. When we have time decay, we worry that price moves in our favor fast. With futures, we don't have to worry about this. NQ moves 1 point is $20. Now, it might sound like a lot less than ES, which of course 1 point for $20 is less than 1 point for $50. However, you have to take into account the ATR on the NASDAQ. Now, NASDAQ is normally trading above $20,000, where ES is usually around 5,000, 6,000. So the ATR on the NASDAQ is almost 4x the size. So if we're looking at that 4x, 1 point times 4x, that's maybe $80 per that same $50 move on NQ. And of course, this is just speculating that price is moving very equal with it. Crude oil, $1 is $1,000. Now, the reason for that is because oil moves in 0.01, so it moves in penny increments, whereas the ES and the NQ, they move in ticks. That's 0.25. So 4 ticks equals 1 point, whereas crude oil, it needs 100 ticks for a full dollar move to make that $1,000. GC, $1 is $100, and that moves in 0.1 increments. So it goes from 0.01 for crude oil to 0.1 for GC, and then 0.25 for ES and NQ. Now, they do have micros, guys. If $50 a point, $20 a point is too volatile for you, which in this market it really is, I definitely recommend getting started with some micros. Now, to find the micros, you would just put the M in front of whichever ticker you're looking at, and it's going to show you the same chart, but on a smaller scale. Micros move 1/10 of the size of a mini. So if you were to trade, if you wanted to risk $25 per point on ES, you would then do 5 micros, because that would be $25 per point. MNQ, same thing. It's $1 is 2 points. MCL, $1 move is $100. And a $1 move on MGC is $10. Yo, what's going on, Ozzy? Guys, make sure you hit that like, hit that subscribe. Make sure you're learning something. It's important that every day we come into the market, of course, we want to earn, but every day we have to learn, because those days that we start hitting ourselves, we tell ourselves, I took a dumb trade, I feel FOMO, I want to make my money back. That's when markets are going to take back your full account. We want to be able to limit our losses, say, okay, today was a red day, I'm stopping out there. Because what you're doing at that point is you're doing what the 90% of retail traders aren't. You're calling it a day, you're following your rules, and you're following your system. Now, here's some futures market hours, guys. We do have New York session is 9:30 to 4 p.m. Eastern. This is the most volatile session we get, so best for trading ES and NQ. We have our Sydney session from 6 p.m. to 3 a.m., Tokyo session from 7 p.m. to 4 a.m., and London is 2 a.m. to 11 a.m. So we have some overlap, especially from New York to London. So New York session opens at 9:30 a.m. Eastern. The London session closes at 11 a.m. Eastern. So for about an hour and a half into the London close, New York session is just opening. So a lot of volatility. If you guys are trading some type of markets overnight, I would usually recommend trading something like gold or oil, as these markets don't necessarily need the volatility and volume that something like ES and NQ do. ES and NQ, they trade a lot better when equities are open, right? Apple's moving higher, Microsoft, they're trending, whatever the case may be. Gold is a very heavily traded commodity across the world. Even they have very popular Forex, XAU, USD. So gold is very liquid, almost that 23 hours a day. 30% rule, guys. 30% rule is one of the biggest rules that people have issues with. I'm just going to cover one slide on it today, and that would be basically limit on your losses. You don't want to hit 30% of a negative trail stop. An example on this, guys, if you have a new 50K account and your profit balance is 4,000, you're up 4,000 on a 50K account, you shouldn't be losing or going in drawdown of more than 1,200. Guys, if this was an Apex rule or not, you shouldn't be risking 1,200 if you're only up 4,000 anyways. So be realistic with yourself, be reasonable with Apex, and you will see consistency and you will see those payouts come. I promise you guys. Apex wants to see you're a consistent trader. You're not a gambler trader where you just go heavy on a size, you're following somebody blindly. They want to see that you could consistently come in and out every single day of the market. So for new and low profit accounts, guys, obviously you can't have a 30% rule if you don't have any profits in an account. So the 30% rule is then based off of the trail stop until you hit some good profits. So if the trail stop of the 50K account is 2,500, your max risk for those first few trades and first few days till you get some profit is $750. Now again, $750 on a 50K account, you should not be risking that. If you're risking $750 with a $2,500 trail stop, you're going to blow that account in just a handful of trades, and you're going to find yourself in this ongoing loop of blowing an eval, buying an eval, getting close, blowing the eval, getting a new eval. It's not worth it. We want to trade evals like we would trade our funded. That way, when we pass our evaluation account, we don't have to change anything, and we're prepared for the market. And another big thing with the 30% rule, guys, that nobody really mentions is once you're able to double your safety net, that 30% grows to 50%, which is huge, guys, a massive difference right there. Examples of the 30% rule. Now, the 30% rule is designed to help traders control risk by limiting the portion of profits that can be put at risk at any one time. Again, if you're up 4,000, you don't want to risk 1,200. If you're up 4,000, maybe max you want to risk 400, right? $400. That's still 10% of your profits. But because we're on Apex and funded accounts, we are able to maybe risk 10%. We don't want to risk any more than that. We want to be careful. Here's an example, guys. If you're on a 150K account and your best profit day was 2,000, here's how you would calculate it. So even if you were on a 50K account and your best profit day was 2,000, you would take that 2,000 and you would divide it by 0.3. And what that's going to do is it's going to reverse multiply the percentage and tell you, okay, well, 6,667, 30% of this equals 2,000. So your end P&L, when you go to take your withdrawal, should be above 6,667 if this was the size of the account, if that was the amount of profit you took or your best trading day. This means your account must show a total of at least 6,667 to remain within the rules. So account sizing and 30% rule. Guys, here's some quick examples of where your account should be and examples of that 30% risk based off of the threshold. So 25K account max risk is $450, which again, if you're trading, let's say, forget the 25K, guys. If you were trading an account with just 1,500 in it, are you really going to risk $450 per trade? Absolutely not. You're going to risk a whole third of your account almost. No way. That's poor risk management. And that is sort of how people get stuck in this loop. They might see this 30% rule, say 450 max risk, and think that's too low. And they try to run it really close. They'll say, I want to risk $300 then per trade. And again, not realizing this is the actual account size we should be trading off of. We should not be trading off of our 25K, 50K, 100K. We want to be trading off of our trailing threshold until we build profit. Then we want to trade off of our profit. And that's exactly how we want to be trading with these prop firms. So payout requirements, guys, huge questions. And guys, any questions on Apex, please drop it in the chat below. I'm going to go over a few more slides, and then we're going to go over some market analysis. And we're going to cover what exactly is going on. Because right now we have Goldman Sachs saying that they could see inflation spike with new tariffs, but they're saying the inflation spike might not last. There's so much going on in the economy. So eight trading days. You must complete at least 8 trading days before requesting a payout. It does not have to be in a row. Profits on 5 of those days, at least 5 of those 8 trading days, must show a profit of $50 or more. Now, remember, that doesn't mean you should make $2,000, $2,000, $2,000, $2,000, and then $50. If you could remain consistent, consistency is key, and that's what we want to look for 100% of the time when it comes to Apex, guys. Safety net for first 3 payouts. The safety net is calculated as your drawdown limit plus $100. This requirement applies to your first 3 payouts only. Profit split 100% of the first 25K and then 90% after that. And your account must meet the required minimum balance to get approved for a payout. And I'm going to show you guys the minimum balance on this next slide. Just make sure you guys keep hitting that like button. I do appreciate it. If you're on Twitter, make sure you hit that share to keep this knowledge going. So anybody that does trade prop firms, anybody that does trade Apex is aware of these rules and conditions. A lot of people really get sidelined by some of these rules, and they're a little worried to get started with Apex. When in doubt, they're very cheap to get started with. They're the ones that I normally recommend people get started with anyways. Very easy platform to use. You could purchase a TradeOvate account, link it right to your TradingView chart, and trade right on TradingView. So minimum required balance, guys, 25K account is 26,600. Then you could take out 500. This is the minimum required balance to take out the minimum payout of $500. So if you guys want to take a quick look, 50K account, 52,600, you could withdraw $500, and so on and so on. Maximum payouts. Now, guys, this would be if you wanted to break above the minimum. You don't have to take the minimum, right? Keep trading harder, keep staying consistent, go for that maximum. Maximum payout on a 25K is 1,500, which is our trail stop. 50K is 2,000. 75K is 2,250. 100K is 2,500. 2,750 for 150K, and the most we could take out of a $300,000 account is 3,500. Now, these are max payouts for the first 5 trading day for first 5 payout windows. Once you hit payout number 6, you're able to withdraw all of your profits. So some common questions that people ask, right? Do I have to trade 8 days in a row? Absolutely not. You just need 8 total trading days. You could take 3 in a row, take 3 days off, and go take another trade, take another day off. There has to be no consistency with what days you trade, just consistency with your outcome and performance. When do I qualify for 100% payout? Well, you qualify after 5 approved payouts, right? So you could get your full 100%. Let's say you're on a 50K account, you're up 20,000 in profit, but of course we could only take 2,000 out per window. Once you hit that 6th window, which is after 8 trading days on 1, 2, 3, 4, 5 payouts, number 6 is when you could take everything out. You could take out that full 20 or however many accounts you have, because you could trade up to 20 accounts with Apex. How long do I have to pass the evaluation? This is another question people worry. Do I have to pass it in a day? Do I have to pass it within this month? There's no time limit, guys. What's great with Apex is they don't give you a set time frame that you buy it now. You have to pass it in 2 weeks. Take your time. Apex prop firms, these are fantastic for new traders or even experienced traders that are looking to practice a new strategy or system. Is there a daily loss limit? No daily loss limit, but you must follow the trailing threshold and the 30% rule. And do commissions count towards trailing threshold? Of course they do, guys. If commissions are going to factor into our regular account, they're going to factor into our Apex account, right? We have to pay commissions. I believe it's 0.35 cents per contract on micros, I think, and then ES contracts like $1.15 per entry in, $1.15 entry out. I will have to look into the exacts for you, but being that low of a price level, low of an amount, you don't really have to worry unless you're trading a mass amount of contracts in what's called hyper scalping. Hyper scalping is maybe on a 1 second, a 5 second chart, getting in 20 contracts, out 20 contracts, in 20, out 20, consistently. Right? We don't want to be doing that. We want to be patient. We want to be day traders, and we want to look for our A+ setup every day. And can I hold trades overnight or over the weekend? No, guys. Apex requires us to close all positions before markets close. Now, even though futures markets seem to be open all day long, they do close at 5 p.m. Eastern, open back up at 6 p.m. Eastern on every day except Friday. They close until Sunday. So you do have to make sure all of your limit orders and positions are closed by the time the futures market closes. And when are payouts processed, right? Requests are reviewed once they're submitted. There's no longer a payout window. Apex used to have a payout window from the 1st to the 5th and the 15th to the 20th of every month. Now, there's no more window. As soon as you can apply for it, you hit your 8 trading days, you could take it. And how can I link Trade08 to TradingView? This is a video that I covered, and if you guys want, I will post the link at some point later in the stream. Guys, win a free evaluation account. In the meantime, make sure you fill out that link in the comments to win a free Apex account. Last week's winner was Gabriella. Congratulations, Gabriella, on winning a free Apex evaluation. Join us every Wednesday at 11:30 a.m. for a chance to win. And now I think we're ready to get in some market analysis, guys. Fantastic. Real quick, I do want to cover Apex Trader Funding website. They have their 90% off evals, ends in 12 hours. So you do have just till the end of the day if you do want to get any accounts. Make sure you use that discount code up top, FFEVER, or you could scan the QR code as well. All right, guys, let's get into some market analysis. So today has been extremely choppy. We saw markets opened up, and right out the gate, we tried to rally, and we ended up failing. Now, this fail and this very choppy push lower could be brought to us from the uncertainty, right? Now, we've had the weekend came. We had our long weekend. We had Memorial Day. Markets were closed Saturday, Sunday, Monday. Now markets are back to opened on Tuesday. Tuesday was also pretty choppy price action in the sense that it didn't really give us a pullback. We just sort of rallied our way higher. We didn't have a proper pullback like we normally do in the markets. And when I say a proper pullback, I mean something along the lines of this, where we create some type of zone, we pull back to that zone, and then we continue higher, right? Most trends in the market will see two legs. Leg number one will create the imbalance and area for a re-entry, and leg number two is usually where we get our entry point off of that first area one. Now, because we had that grind higher today, I was a little concerned that we would end up failing. Now, we had this key level here, this yellow zone around 59.12 to 59.15. This was actually a zone that one of my students pointed out this morning. Big shout out to Ozzy, killing it, man. And he was looking for this zone. I told him, I said, I don't know, I'd be careful with that because we don't really have such support down here. But that worked as a very great support zone. This is a point where price consolidated yesterday during the New York session. And just before that, during the evening session, right, the afternoon or pre-market session, this was an area of resistance. We flipped it, and now it becomes an area of support. So great job. That's what we want to look for, guys. We want to try to keep our trading as simplified as possible. As a trader myself, I trade with Apex. I trade my own funded account. It's very important to know what setups work in my favor and what market conditions are going on right now. Now, something else I note, guys, is today we have FOMC minutes. That's at 2 p.m. Eastern. Now, it's not the full meeting, so we probably won't get that volatile of a move, but it could lead into something if it does have some confidence behind it. Now, we could also check our news feed as well on TradingView, and we see that there's not much going on. U.S. Dallas Fed Region Services Employment Index is negative 0.2 in May versus the negative 0.51 in April. So it does seem to be making its way higher. That would be a bullish sentiment, something to be aware of and keep an eye on. Now, something I do like to keep an eye on too, guys, is gold. And the reason I like to watch gold, especially when markets are choppy like this on the ES, is because when there's uncertainty in the markets, especially strong uncertainty, an example, tariffs, we will see strong momentum in gold. If we were to look at the daily time frame here on our gold chart, we were just recently at all-time highs. If we're looking at our daily chart on the ES, we are not near those all-time highs. It's been quite some time since we were trading near them. The last time we were up here was February 19th. Right now, it's all the way Wednesday. It is May 28th. And we are not back at those all-time highs yet, whereas gold created this all-time high late April 22nd. And right now, May 28th, we are only about 6% away from those all-time highs. So gold, I was leaning a bit more bullish depending on market structure and market sentiment. I really want to see that if there's some uncertainty, if Trump wants to go a little heavier on tariffs, does gold want to continue higher? We're almost creating some higher lows right here, but on intraday, on a lower time frame, we're creating some lower highs as well. So I'm going to mark those out for you guys so you see exactly what I'm talking about. So here we were able to make higher high, a higher high. Now at this point, we created a lower high, and even off of this rejection, we have another lower high. So now this would suggest that on the daily time frame, a higher time frame, it's trying to suggest that we're pushing back bearish. Now what I would also do is I'd look to see how the bear side, the shorts are moving. And what I see on the shorts is I see that we're making a lower low, and now we just created another lower low. So now on gold, if we're able to break this previous day low, now that I have my analysis, my daily time frame, my higher time frame trend on gold, I'm able to break it down to 4 hour, 1 hour, 2 hour, 30-minute time frame, whatever the case may be, to find areas where I would want to look to short with this higher time frame bias. Now, because we're looking bearish here, it almost is creating a bear flag. That doesn't mean I would be taking shorts every opportunity I get. Whenever it comes to taking any trades in the market, we want to make sure that there's some confirmation behind it, whether it's gold using the gold weighted gold index, or you're using something like the weighted index on the ES and NQ. Now, when I mention weighted index, I'll show you exactly what I mean. So here we have, let's put the 5-minute chart up, and right now we're looking at ES on the top left, and you know what I'll do? Do more sessions. We'll come over to Canvas, and we'll turn our replay mode on, I'm sorry, our watermark on, so you guys could see what tickers are in each one. So we have ES in the top left, we have NQ in the top right. I have my VIX on the bottom left because I'm looking for VIX to inverse to show me direction of the ES. And I have what's called the weighted index on the bottom left. And I'm going to drop that in the chat right now for you guys in case you want to copy it and post it into your trading view or Thinkorswim. What you would do is you would take the symbol right here. I'm going to, again, post it in the chat right now. That is the 8.50. That's this one, right? So what it does is it measures 8.5 shares of Microsoft, 8.18 shares of Apple, 7.5 shares of NVIDIA, 5 shares of Amazon, 4.5 of Meta, and 6.3 of AVGO. Now, the reason I'm weighing these stocks is because they have, well, these 6 are top 10 when it comes to the ES holdings and NQ holdings. Now, because they are mainly tech, I like to use this weighted index to find direction on the NASDAQ. So if equities are looking bullish, I'll look for the NASDAQ to continue higher as well. If I see that our weighted index is bearish, that might help me find some area of resistance. So this morning when NASDAQ was moving towards this key level of 21,560, we also had on the weighted index, we started to fail, right? Markets weren't as strong. We had a very strong impulse move on this candle on the NASDAQ, whereas the weighted index failed. It did not have that amount of strength and continuation. And that's how I like to use the weighted index, right? I'll also look for key levels, just like the VIX. If I'm using the VIX, I look for key levels and direction because I want to find if ES is at support, if VIX is also at resistance. All right, so let's take a quick look at gold now, guys, because again, gold was looking like we're creating some lower highs. Now, I mentioned something called the weighted index on gold. Now, we had the weighted index on ES and NQ, and that would be this bundle of stocks. Now, the weighted index I like to look for on gold would be the weighted Forex index, right? So we're looking at gold against the GBP, gold against the euro, gold against AUD, gold against Canadian, gold against everything but the USD on this chart. Now, what this chart helps with is it sort of helps with direction, trend, and momentum. So if I see that right here, we see that the gold, weighted gold, is pushing higher with strength. Normally, our regular GC gold futures will follow through as well because it's got good momentum. This helps a lot if we're looking for areas of resistance, areas of support, or whatever the case may be. All right, now something on oil. Oil, unfortunately, doesn't give us a good weighted index like that. So oil is something we would have to look for key levels and areas of volume. Low volume shelves, high volume shelves, Fibonacci retracements. If you use moving averages, it's another great way as well to trade. Let's see. So something I look for on gold. Now, I always like to do a top-down analysis whenever I'm doing any kind of charting, whether it's the morning pre-market prep. I want to do my daily analysis, make sure I'm bullish in the right direction, bearish in the right direction, or if we're not trending at all, if I stay out of it, or look for a range trade. So the first thing that sticks out to me on oil is we've had a massive down move. This is since about mid-January. This is when Trump started announcing tariffs on Canada. Now, Canada gives us and helps supply the US 50% of its crude oil inventory. So with that being said, once Trump starts threatening Canadian tariffs, that's when crude starts reacting, which we would think would be bullish to make the price of crude higher. It actually reacted bearish. So until I get some type of confidence and some type of deal with the US and Canada, or the US and some other major crude oil inventory, I don't really know if we're going to reverse yet on oil. We've been extremely range bound. We had this first major leg right here for almost a 16% drop. We had our pullback right here. Then we had our second leg for another 19% drop from those highs. So with that being said, I see two legs already formed on oil. I see we have now been basing here on the daily. For basing on the daily, there's a great chance that the weekly is also looking like it's trying to find our bottom. So I would really be patient on something like oil to see if it could get back above the 64.82 area. You guys see this green level right here? When I go to the daily time frame, you'll see this range right here. This was a major area of support for years now. It's been support since, well, last year, 2024, for over a year now. It's been support. So because it's a higher time frame support level, I want to watch it. We broke it. Now it's resistance. Now I want to see if we could reclaim it one more time. This is my make or break on oil right here, guys, between 63 and 65. If oil could get back above 65, hallelujah, thank goodness. Much better, much easier to trade. With oil below 63 comes a lot of uncertainty, comes a lot of worry, and comes a very little continuation in either direction, making it very difficult as day traders to trade. On something here like gold, again, same situation. Today was very choppy, and because we have economic calendar news coming up, it could be choppy leading up until that news, until we get some type of certainty or some type of economic relief that says, hey, listen, A, B, and C is going on. We just made another deal with Canada with oil. We made another deal with China for an extension. We made another deal with the EU, so we won't be hitting them with 50% tariffs. Right now, there's too much what ifs in the market for something like ES and NQ for the market, because whenever we say the market, we should think of the market in a whole, and that's normally referring to the ES, the S&P 500. If you trade options, you would be trading SPY, but you are looking at the ES there. So on the daily time frame, we see that we had and I'll pull up our ES with the March contract. And this is where I have it marked out for us, guys, right? So this was our tariff worry. This was our first tariff deal. This was our second tariff deal with China for that 90-day stay on those tariffs. Then we had our yields hit 5%. We had a strong pullback. Now we have FOMC minutes today. Well, this strong pullback, it did end up hitting an area of support. This area right here on the ES was resistance. We squeezed through it. And now it's working as support. So again, higher time frame suggesting that we hold bullish. So let's take a look, guys. This is the ES. We could take a look at the NASDAQ as well. NQ is a very highly traded ETF or futures in this point. So we want to keep an eye on it. We want to see where we're currently trading at, if it's also holding support or resistance too. And we want to be aware of ES as much as we're aware of NASDAQ if we're trading one or the other. Guys, let me know, what futures do you guys trade? Do you trade gold? Do you trade ES, NQ? Do you trade micros? Let me know in the comments what you guys trade. I want to know what is the most traded out there for our amazing Apex community and Benzinga community. And guys, don't forget, we do have NVIDIA has its earnings call today. So after close today, NVIDIA posts its earnings report, and then we'll have its earnings call at 5 p.m. Eastern. So guys, if you want, make sure you join back here at Benzinga today at 4:30. Me and hopefully Paul Meeks will be joining me too. But I'm going to go over some roadmaps for NVIDIA going forward, some companies that they might be working with, and some products that they might be working on as well, and some things we could be listening for on those calls. Joseph says he trades NQ. A lot of people trade in NASDAQ, man. Very volatile, gives us good momentum, and it's almost, they always say it's a scalper's paradise, the NQ, the way it trades. So let's go back down. We have our daily time frame. Now, the last daily candle we had was a very strong bullish candle yesterday. But again, leading into today where we have economic news at 2 o'clock, it led to very poor price action when market opened. We opened, we rallied, we failed, and then we chopped our way around. And since about 10 o'clock even, We have been chopping. We've been making lower highs. We've been making lower lows. But now, ever since 10:55, this is now 11:55, we just created a higher low. So now comes the question, does NASDAQ want to hold? Do equities want to hold back bullish? And something I also keep an eye on, guys, is equities. On a top chart, I have 4 monitors all around, right? We have the equities on the top. We have our futures on the bottom. And I have on my left-hand side some book map because order flow is very important when it comes to trading. So let's take a quick look. This is where I have my equity screen, right? So I keep an eye on Meta, Microsoft, Apple, Tesla, Nvidia, and AMZN, which is Amazon. And this is what I like to look for, right? What I'll do in the mornings is I'll come to the 15-minute time frame and I'll zoom out a little bit and I'll take a quick glance at all of these large cap equities. Again, these are large caps that weigh heavily on the NQ and ES. Therefore, I want to make sure that they're trending together. If not all of them together, at least 4 or 5 of them to help confirm confirmation of continuation from it. So something I noted this morning was this. So guys, also this green dotted line, this red dotted line, those show previous day high and previous day lows. So I saw Meta was opening above its previous day high, Microsoft above its previous day high, Apple, and it looked like everything was opening above its previous day high except for Amazon. Once Amazon opened, though, it tried to rally, it broke previous day high and failed. Just like the rest of the equities, we had that morning where the morning opened, we had a small rally like we saw on the NASDAQ, and then it failed and it broke back within its range. We saw Microsoft ranged lower, Apple ranged near that previous day high, near that key psychological $200 level. So because equities were failing and not finding continuation, there was no good volume, that tells me the ES and NQ are also going to fail and most likely not find that continuation. When it comes to trading, guys, yes, it's important to take green trades and it's important to be right. But when we're right about being wrong and right about not taking a trade, that's even better because then we're able to say, okay, no, this is too risky. This isn't in my favor. I don't want to take this trade right now. And that's what will set you aside from the 90% of traders that are failing, that don't journal, that don't look at their analysis, that don't give themselves 5 or 10 minutes in the morning before market opens. Guys, give yourself the time. Give yourself a trading journal. Take the opportunity the market's giving you and learn every day. If you're doing the bare minimum and think you're going to learn how to trade, I got a bad wake-up call for you. But if you're doing everything you can, you're taking the time to journal, you're reviewing your trades. Even if you can't journal and you want to review your trades off of screenshots, that's great too. What I usually recommend to people, now guys, you could join me. I live trade every morning for the Bullish Bears community. You guys can join me at bullishbears.com. But what I do every morning is I come on at 8:30, a whole hour before New York session opens, and we do our analysis on ES, NQ, GC, CL, and we see what setups are occurring. How did previous days trade, and so on. Something else I like to recommend to people, if you can't journal your trades, if you have a Discord, which is free, you click add a server, create my own for me and friends, call it whatever you want, you call it trading journal, and then you have your own trading journal right there. You hit create, gives you a main channel, then you're able to take some screenshots and journal your screenshots. And guys, even just doing that alone is going to set you aside from the rest that are failing and not able to get out of their rut. And it's going to help push you to that next step, right? When it comes to trading, it's not just about, I'm unprofitable, I want to be profitable. No, it's about creating a system, a strategy, something you could follow day in and day out. Our goal as traders is to find something we could repeat, if not every day, almost every day, right? Obviously, market conditions aren't always going to be the same. So if we could find something that's a base hit, or something that we could repeat very frequently, that's what will push us profitable and that's what will keep us consistent. So yeah, you could use Discord, make a trading journal in there. What I'd also recommend, guys, if you want a free trading journal, you check out my website at tradingpioneers.net. I'm going to drop that in the chat real quick, and there's a free trading journal in there as well. You go over to resources, and under resources, you scroll down to trading journal, you click download, and it will download a Word doc for you where you could then journal your trades. You could print it out if you want to know. A lot of people print it and do better when they are physically writing it because something changes when we physically write something. it enables us and it helps us psychologically to really implant it and remember what happened. So trade information, your trade date and time, entry price, exit price, trade symbol. This is all very basic information. This will take you less than a minute. Risk management, trade analysis and outcome. Now, this is what makes a huge difference for new traders versus retail traders, right? The traders that haven't gotten out of their rut. Reason for entry for the trade. Why did you take the trade? Trade setup or strategy used. Percent gain or loss. You don't have to really do percent gain or loss because we're doing futures. And then trade review and lessons learned. This again, these two boxes over here, this is what will help you form your setup that you're consistently looking for, your strategy, your system, whatever it is you're looking to form and consistently work at. And that's exactly why journaling is so important, guys. All right, guys, back to our analysis. Now, obviously the NASDAQ as well, very tough point. If we are able to break, I would look for 21,500. But if we could break 21,500, we might make our way to all-time highs. Guys, I'm curious to know what you guys think in the comments if we're going to make our way to all-time highs or not on the NASDAQ. I do think with some momentum, with some good volume stepping in, maybe FOMC minutes comes in strong. They give us some type of good idea going forward. Perhaps rate cuts, probably not, but we don't know. We're just traders. We can only react. We cannot predict. Now, something on gold, guys, that I want to point out. This is our volume profile. A lot of people were asking me lately, what's this big blue chart over here on the right-hand side? This is our volume profile. It's very important that we understand where volume and price is being traded. Once we're able to understand this, we're able to find great levels and areas to enter because price and volume go hand in hand. Volume moves price. Price cannot move and remain higher unless volume is initiating it, right? Unless volume is saying, yes, we're going to continue higher. We see that overnight. We could use our replay system and bring it to right over here. We see that overnight we had our D shape, and whenever we have a D shape on our volume profile, that suggests that we're range bound. So we could play it out and we could see that we tried making our way towards the supply zone. Volume tried to get higher, but as it developed, we got very weak in the supply, right? We pushed higher, volume failed to continue higher, and we rejected the supply zone. So using volume profile along with our support and resistance is very important because it could help confirm or deny our key levels that we're looking at. And when it comes to finding price levels, I know all of you are probably fantastic at it, but how are you at confirming those levels? It's very important that we're confirming the levels we're looking at, not just plotting some random lines and hoping for the best. So when we use something like volume profile, we look for a few things. We look for a low volume profile for an entry, or we look for high volume profiles to see where our range is currently trading at. And we could also use high volume profiles as targets. Let's say we were trading far away from this high volume profile, almost like we were up here. We could, again, go replay system, come back over here. I see that, okay, well, we're starting to sell off of supply. Looks like our point of control is right here at 33.05. I could look to target that 33.05 on a pullback, and that 33.05 point of control was hit after we were extended and pulled back. So again, volume profile, looking at supply and demand, it really helps keep us in line. Let me know what strategy you guys use in the comments. Do you use supply and demand? Do you use ICT concepts, smart money concepts, order flow? Some people used to use, I don't know if you guys remember, something called the strat. That was another big one where you number the candles depending on what number the candles were. It's a whole lot of different strategies when it comes to the market. Moving averages. And guys, there is no right or wrong strategy. What is right and wrong is how you apply these strategies. If you're looking to trade a moving average one day, and you're trading moving averages for a few days, and then you switch to supply and demand, and then you switch to moving averages again, or you switch to fair value gaps, once you start jumping around like this is called strategy hopping. We never want to be a strategy hopper because we'll never see consistent results. Pick a strategy, give yourself a week, then 2 weeks, then 3 weeks to see the results of this, to let yourself adapt to market conditions, to let yourself feel out the strategy, to let yourself get consistent results. If 2 or 3 weeks pass and you just can't get anywhere with a strategy, then congratulations, you found one that doesn't work for you. You can now move on to the next one confidently saying, okay, this one wasn't it. For me, supply and demand is a very basic way of understanding highs and lows of the market. So when it comes to supply and demand and volume analysis, it keeps things very simple. As traders, guys, we should never try to not oversimplify, but overcomplicate our trading. We don't want to oversimplify it either, but it is important to try to keep it as simplified as possible, because when we're looking for systems and our setups, we want to keep it simplified. If this, then this. There is no in between. Once we start getting a little subjective towards our system and our strategy, that's when we're going to get a lot of poor results, and we're not going to be able to consistently find some continuation in that. So let's see. So again, gold. This is the blue line we see here. This is the developing volume average. Now, if you guys want to know how to use this tool on TradingView, you would come over here on the left-hand side. You come over to the forecasting. That's where they have the long and short position. You come down over to anchored volume profile. You would click it, and then it will have you drag it and click it wherever you want to start the volume profile. And wherever you start it, it will extend to wherever price is currently trading at. So what I like to do in the mornings, guys, is I'll update it, and I'll put the start of our volume profile back at that 6 p.m. open, right? So futures markets open at 6 p.m. Eastern. This is Tuesday. This is for Wednesday's price action. That is where I would place it, and that's where I would use our volume profile. Another way I like to use it too is I like to turn it on so you could only see this one on the 45-minute time frame. And to do that, you would double click it, go into settings, go into visibility, and you would turn off everything except for minutes. And because I want this on the 45-minute time frame only, I would make the range 31 and 47 because I don't have a 31-minute time frame. Now, if I go to the 30-minute, that's off my chart. It's not something that's blocking me right now. If I go back to the 45, it's something I could quickly check. Now, something I do note here with this volume profile, and this one was plotted now at Sunday because this is my weekly volume profile, my developing weekly volume profile, is I see we have lighter volume in this supply zone. And where do we like to look for our entries? At those low volume shelves. So this supply zone that worked as supply overnight, this might be another area I would look to short. So what I'm going to do is I'm going to add my alert here on gold and look to possibly short this area again. Now, if gold does want to continue back higher and we do reverse again, remember looking at gold, if there is a lot of uncertainty and worry in the market, gold performs very bullish. If we get that, then I'm going to be looking to see if we could claim above this supply zone. This is actually a 15-minute supply. I don't know why I have it marked out as an hourly. It's a 15-minute supply, so we're going to update that. S15 minute. And guys, if anybody here does want to learn how I trade, how I plot my levels, please feel free to reach out. My website's tradingpioneers.net. This is my one-on-one mentorship. For anybody watching on Benzinga here, I do offer a 50% discount for your first session for one-on-ones because I just love you guys so much. But you could also, there's a let's chat button. You come down here and you write something and I'll get back to you shortly. But other than that, guys, you know, it's really important to be aware of what's going on in the economy. Now, if you are active on social media, I would definitely recommend following our Instagram is Benzinga, obviously. And on Benzinga on the Instagram, I like to cover every day, every other day, whenever there's some type of strong economic news. I like to cover it within a quick 30-second span. So I inform you guys on what's going on in the economy, because it's important to be able to confidently say, I know that manufacturing has been poor lately, or I know that manufacturing has been strong lately. I say why it's been strong, right? So manufacturing came in strong. Why did it come in strong? Well, there's a good chance that all of these companies are trying to front run or buy a lot of, before tariffs come in, a lot of their products. So that might be hyping up the stats. So even though economics might be looking strong, we have our treasury yields, which was looking weak, which is a lot of uncertainty. So there's a lot of worry going on in the market. If we had consistency with our earnings, our big tech earnings is positive, that's great. Treasury yield is bearish, that's not good. And our manufacturing is bullish. So again, we have a good, bad, good. That leads to a mix. When there's a mix in the market, that leads to uncertainty, which leads to this kind of price action. I'll show you guys this kind of price action. When we get this kind of price action, as we all know as traders, we don't want to get in and get stopped out every now and then. We want to be in and we want to be consistent. And that's why it's important to watch other markets like gold, like oil, because when we're getting poor price action on something like ES and NQ, there's a good chance that institutions, large investors, are taking their money out of markets because there's uncertainty and putting it into something that trades well in uncertainty. And what trades well during times of uncertainty, everybody? That's gold. So with that being said, guys, I am going to be looking for some gold longs. I'd like to do some analysis to see if we have any demand zones. I had this blue zone right here, and we see this is our area of support. For quite some time, we're looking at the hourly time frame with support, 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 support. So every time price tries to dip in between this 320, 32.92 and 32.75, buyers are able to step back in. So this is something I'd be careful for. I wouldn't want to go short at the lows. We never want to sell the lows or buy the highs. We want to do the opposite. We want to buy the lows and sell the highs. Markets range about 80% of the time. They're directional about 20. So if we're able to find those ranges and take advantage of them, that's going to, again, leave you in the trading game for longer, give you more opportunities and better trade setups. Now, something I do want to mention on gold, guys, one last little tidbit for you guys, and make sure you're hitting that like button for all this knowledge I'm dropping. A lot of gold nuggets in here. Something I like for on gold, oh, what was I going to say? Man, no more tidbits, that's it. But something I like to look for on gold is I'd like to see how we react to these lows. Most likely, I'd like to see if we could break these lows and reverse back higher, and the reason for that would be the anticipation of us moving lower. Now, we do have on the 4-hour time frame, and now, guys, make sure you're always going through all of your time frame analysis. This will really give you a clearer picture of direction and zones of interest. On our 4-hour time frame here on gold, we found support and we had a nice rally. Now, when we have support and a rally like this is where I find my supply and demand. So we do have a level of support at 32.24. So yes, what I would look for tomorrow, and maybe even with the FOMC minutes today, is to see if gold wants to break below this 32.75 with some momentum. And we might be able to target this demand zone down here. Now, something else I might look for, because I'm not trading 23 hours a day with gold, is let's say markets open up tonight, they trade overnight, we're trading, we're chopping our way lower, and gold opens somewhere up down here. If gold's opening somewhere down here, and I know that there's a lot of retail traders trying to chase shorts, I know that there's a good area of support right here. I might look for longs, looking for a short squeeze to then squeeze all of the people in short position so they get stopped out. Because remember, guys, if you're in a short squeeze, let's say we're trading lower and we start squeezing back higher, the people that are in short positions, for them to stop out, they don't just stop out of a position, they have to buy back their position. So they have to buy it back while price is moving higher, adding buying volume to the mix. And again, that will help fuel the move back higher as well. These are all things I would keep an eye on. Crude oil, again, is really a no trade zone, in my opinion, until we're able to get back above that 64, 65 area. Right now, we have a very strong 4-hour supply that worked as resistance around 63.90. It would add an alert over there and see how price wants to react. I would love to see if oil could get back above 64, 65. I love trading oil when it's between $70 and $80 because the volatility, the ATR we get, and the entries we could get are very, very astoundingly accurate. And the reason for that is because we use tools like Bookmap. I'll show you guys Bookmap in a sec. See if I could close this up a little bit. So guys, this is Bookmap. Bookmap shows us order flow, it shows us time and sales in level 2, all on our screen right here. So let's take a look at oil. This is CLN5, so that's our crude oil contracts. And I see on crude oil all the volatility, we see all the volume bubbles, but something I see on oil is our CVD, which is our cumulative volume delta, is red, which tells me that most of the volume in today's session, even though, yes, we're trying to push green, has been selling volume. That would be a major red flag for me if I was in any long positions right now. I'd be worried that, okay, listen, sellers have not really stepped out. We had a bull run right here on oil. This was at, let's see, 1135. This is when we had that big 1135 bull run. But when we had that bull run up here, CVD kept pushing lower. And that's what gave us that big reversal, that big pullback right there. So very important, CVD, cumulative volume delta. If you don't have a tool like Bookmap, I definitely recommend using something, even if something free like TradingView, where you could use the volume profile. Volume profile is very helpful as well. There is a, so let's see, where is it? There's a range volume profile, fixed range volume profile. Now this is helpful if you want to do something on, let's say, ES and NQ, and you want to see where that previous day's point of control was traded. So we could take our fixed range volume profile, bring it from our 9:30 candle to our, let's do 4 o'clock candle. Now I see that our point of control on NQ is right here. Now I can mark out that point of control, and I see, look at how well price traded on that point of control today, guys. That is huge, right? We pushed higher, we started to sell off. We could have used point of control as a target or even a key level to try to scalp some long positions off of, because it worked as our low. This point of control lined up right with our demand zone down here too. So again, this is sort of finding confirmation to our trade setups, and that's exactly what we want to do. What we want to do is in the mornings, we want to come on, whether you're getting on an hour before market opens or getting on 15 minutes before market opens, you're getting on before market opens. You're plotting your levels, you're going over previous day's price action, and you're confirming and looking at your zones before price gets to them. What we're doing at that point is we're getting rid of any type of unnecessary emotion like FOMO, fear of missing out, and we're able to say, okay, listen, if the market's trading right over here, and again, a replay system, if it looks like we're trading right over here, well, this is the middle of nowhere for me. I don't have any, we'll delete this for right now. I don't have any zones, any price levels here. This would be a no trade zone. Even right here, we had a strong pullback. If somebody was looking at this chart with no drawings, just VWAP, they would say, oh, we just broke VWAP. We're going to push lower. I'm going to grab a short here. We're going to continue. I'm going to put my stop loss here, and I'm just going to grab that momentum. What happens when something like that happens? Does it work? Sometimes. Does it always work? Not all the time. It's very choppy price action, very little follow through, and you have to ask yourself and be realistic too. At this point in the trade, when you entered over here into momentum and it starts going sideways on you, would you really be able to hold that? Because emotionally and psychologically, we are still human. We have to take these emotions in for account, as well as our strategy and system. So again, would you hold this trade or would it chop on you, right? Is this a good risk to reward trade too? Well, no, this is a 1.3 to 1. You're risking $100 to make $130. You would have to have a win rate of about probably 70% to be profitable. Whereas if you have something like a 2 to 1, you could be profitable at only a 40% win rate, maybe 30% win rate. So risk to reward is very important, guys. Guys, make sure you're hitting that like and subscribe. I do appreciate you all for tuning in. And make sure you join me for coverage of the NVIDIA earnings call later today at 4:30. Hit that like, hit that subscribe, and hopefully next week we will have Peter Tuchman and David Green back with us. This is a fantastic stream. Make sure, guys, don't forget, fill out that form in the comments for a chance to win a free Apex Trader evaluation account. Can join me next week as well. You guys could join me for live trading every day if you join our community at bullishbears.com. I do live stream on the Bullish Bears Trading YouTube on Mondays and Fridays, but I do live stream Monday through Friday for their community as well. So great stuff, great opportunity, and it's always important to trade with the community so you're not sort of trading by yourself. When you're trading by yourself, it's good. Sometimes trading with the community could get a little hard too in case somebody has a different bias. But with that being said, it's important because let's say this morning I was unaware of some economic news. If somebody in my community said, hey, Kevin, don't forget at 10 o'clock we have A, B, and C. Well, that's what community's for, right? We want to look out for each other. We want to say, hey, keep an eye on this, or hey, this is moving if somebody else isn't aware of it. And that's what's really great when it comes to trading, when it comes to community. So guys, make sure you follow us on Instagram is Benzinga, and take care. Hit that like and subscribe button. And I will see you guys on next Wednesday.